Let's look at some solid numbers. It's earnings season, and Arvind posted recently a fairly decent set of numbers. Joining us now is Mr. Sanjay Lalbhai, Chairman and Managing Director of Arvind. Good morning, Mr. Lalbhai. Thank you very much for joining us. We have, of course, more longer-term questions for you, since you're almost a visionary in this space. But first, just a word on the results. It's a decent growth in income that your company reported, but margins were a tad under pressure. How does the year look to you? Is with some very strong growth vibes coming from the United States and maybe perhaps US still dibbly-dobbly recovery. Do you think FY15 looks like a good year in terms of export and revenue growth?
You are absolutely right that the Q1 numbers, the EBITDA percentage has dropped. One issue we have been facing is that our wovens business has gone for a massive growth, and we have been reshuffling the machinery. So Q1 and Q2 will remain a little disturbed, and we've lost kind of some margins and contribution because we have been relocating machinery to increase the capacity. So that is one of the reasons why the EBITDA percentage for textile business has dropped from 17.7 to 17. So there is a slight drop in percentage. However, brands and retailers performed better as far as EBITDA margins are concerned. And as you know, that Q1 is the weakest kind of season for brands and retail business. So going forward, if the monsoon is normal and with a new government at the center, we are very bullish. We believe that the economy and the markets will recover, and we should be looking at a strong kind of performance for brands and retail business. As far as textiles is concerned, we have no concerns at all. I think the demand is pretty strong. Exports are very strong. All the entire value chain, you know, be it spinning, be it fabrics, be it garments, all are doing well. Of course, spinning is under stress because China is buying a little less, but fabrics and garments are doing extremely well. And we believe that going forward in this financial year, there should not be an issue as far as sales are concerned.
Mr. Lalbhai, good morning. Let's talk about the other announcement that you made where you will be looking to demerge and eventually list the real estate business. Can you just give us more details on this, when the listing is expected to happen, and what is the current turnover that the real estate business has? What are the projects that you manage? And eventually, how much do you think you can grow it to?
Yes, see, the whole objective is to unlock shareholders' value. You know, we are almost getting a conglomerate discount. We have now various businesses in the consolidated numbers which we post every quarter. And we are only known for our textile business and brands and retail. But real estate over the years has done extremely well. It's well established. And we've been only talking about monetizing land. We've never talked about development, kind of real estate development, which is being done by this division. And now this division is well established. We have almost 11 projects underway. The total kind of today, if you have to look at the value, it would be around 2,600 crores of projects are getting developed with a total square feet kind of area of 5.3 million square feet. So it is quite sizable. And as you know, the sales for this business are quite brisk, but we have to report numbers only when we complete 25% of each project. Only once you complete 25% of each project, then it goes into P&L. So P&L would have a lag compared to the kind of sales numbers which we are achieving. Decent sales numbers of around 25 crores a month. So that's the kind of top-line sales numbers which we are achieving currently in these 11 projects which have been launched. And if you really look at this year's numbers, I think somewhere around 150 crores top-line with 20 crores net profit after tax are the kind of numbers which we believe we'll be able to achieve. And year in, year out, I think there would be a decent growth going forward. Once we separate this company and it will get listed by next year, I think April 2015. We believe that we'll be able to further capitalize this company. We'll be able to also leverage this company if need be. As you know, today we are not allocating any kind of funds to this business. This business is growing only out of its cash flows which it is generating. So to that extent, we are not able to fully exploit the opportunity which is being created. So I think this will be a win-win for everyone, because if this is given to the shareholders, current shareholders of Arvind, then as a separate entity, it will chart its own growth trajectory.
Okay.
And it will have no constraints of being a part of Arvind, which is not willing to allocate kind of free cash flows to this business.
Okay.
All our free cash flows are currently going for brands, retail and textiles.
Okay, so whatever now figures under your real estate will go to the new entity, right?
Yes, next year onwards.
Yes,
next
I
year
get your
onwards,
point.
It will be completely a separate company.
Fair point. Let me come to the retail division as well, where you were a little cautious. When do you expect Megamart itself to turn profitable?
See, it is EBITDA
Yes.
positive, but on a net basis, I think next year should be at net level it should be positive. It should start paying taxes. We are in that churn, as you know. We are setting up Power Megamarts, which is a new format of 10 to 15,000 square feet, and we are weeding out the old Megamarts. So there is a churn. And this churn, we will substantially add the new Megamarts, the Power Megamarts, and that would make the business profitable.
Okay. Just one more follow-up question to the demerger. How much capital or debt ballpark will you need for growth of the company post the demerger?
See, we believe that we don't want to dramatically leverage the company. We are getting a phenomenal response in joint development. So because of the strong brand name and very good execution and the kind of response which we have been able to get for the 11 projects, we are getting very large land banks to come as joint development. So currently we have around 360 acres of land which is coming into joint development without we having to spend any kind of money on that. So I think this is a very good model. We can get into number of SPVs and keep on growing the business without dramatically leveraging the business.
Fair point.
I think one of the things which we have learned is that we like to grow this business aggressively, but we may not want to leverage it, beyond a certain level.
Okay. Finally, you had spoken of a revenue possibility of about 22 to 24% when we last spoke. Would you want to better that, going by the good growth in the global economy and the problems in China, perhaps?
No, as I have been saying that, 20-25%, because we are working almost at full capacity in textiles.
Okay.
And brands and retail, to be very honest, the markets have been sluggish.
Okay.
We are hopeful that they will recover because of the new government and a normal monsoon, but that is still to happen. So I won't like to improve on our guidance at all.
Okay, I just have one final question. Some analysts are expecting the eventual demerged real estate business to clock in a turnover of about 750 to 1,000 crores over the next 5 years versus about 150 crores that you just spoke about. Is that a realistic assumption?
Yes, these are the numbers which we have shared with them, that in 5 years, we want this business to be around 1,000 crores with a decent bottom line.
All right, Mr. Lalbhai, it was a pleasure speaking with you. Thank you very much for dropping by this morning.